All right, got about 2 minutes to go. Uh, Volatility's been zapped in just about everything, especially looking. I need to turn this thing off. Stop it from flipping around here. I'll stay focused on this one screen. This, and just before the open, take a look at the cryptos. And of course, you know, we don't pick direction. All we're looking for is opportunity. No indicators. We use the charts just because it's a lot easier to get through to most people with. We're not using any type of fancy Fibonacci or anything else. We're just using price levels. When you buy something lower and you sell it higher, it's real simple. Been doing this for 27 years. People still hadn't got it figured out. But they think that these charting packages are going to give them something now. We've had this charting package with, well, we use this thing, I guess, with Coinbase. Keep forgetting the dang name. But, I mean, it's an okay API. Never had any real issues with it. You do have to contact, I think this is MotiveWave. Yeah, MotiveWave. They use so many different charting packages that it's hard to keep. We're open. Haven't got any alerts yet, but looks like we're going to have just a flat opening. I don't know what's on the agenda for today. Well, let's see what happened here. Sometimes these things in the open don't work as well as they should. This was one yesterday that paid a $14 dividend per share. Of course, we didn't have it, but it was on the scan, so we ended up getting in on that nice little drop there. Any weakness is good weakness if you're trying to take quick profits. We don't know where this is going to go. This could come all the way back down here to the 50% mark. We're fine with that, right? Because we're not going in with huge amounts. If you have unlimited funds, then you can have a different strategy, a different scale. But in this particular setting, what we're doing with these three accounts, anything below 100,000, we want to keep it at 10% of the max shares. So in this case, AFG is being priced at around 121. I'm assuming because we only have we have two shares in this, so it's probably in the anywhere from 15 to 24 max shares. And some people will scoff at that, but when you have under 100,000 in your account, if you're not diversifying your portfolio based on the size of your account, and you're just taking some metric that somebody gave you out of some book, you're probably going to be losing money. We do not use stops here, and we do not take losses. When we buy something, we're in it for life, okay, or until it pays us. So you see the sell limit at 124.15. That's how we get out. Until that's actually breached, we'll own this. But the positive thing here is we can collect these dividends. The normal dividend payout with this one looks like it's about 50 cents, which would be $2 per year per share. Now you multiply this by thousands of stocks. This is how you're going to increase your amount of occurrences. We'll go down through the list here because you'll see some of these have more in them. These are just some of these kind of, I don't even know what this one ends in, pharmaceuticals. It was probably just a something I had read about. It didn't come up on a scan. It's just something, you can put $50 in it and see what happens. That's what we call lottery tickets. That's like less than you know, one half of a percent of the portfolios that we play. When you start talking about, let me get that back to, why is that thing still switching on me? No. All right. You start looking at these different stocks and you say, well, how can you make any money doing this? Well, it comes down to occurrences. We're looking for small moves, and because nobody knows where the market's going to go, it doesn't matter where you buy. These candles mean nothing. All it is what the price action was. You want to stick a line underneath it, you want to put a line above it, you want to use a moving average, that's up to you, but it's not going to help you. What it does is it makes you sit there and think about things you shouldn't be thinking about, except where you're going to buy and where you're going to sell. That's the two things that you need to know. Now there's theories out there that, you know, you want to buy and hold something and just hopefully it doubles in price, and then it splits and then you make more shares. I mean, everybody points to Warren Buffett, but is that really going to be a winning move? At these times, at all-time highs, no. Maybe if you got in at $5 and maybe it's at 300 right now, maybe you ought to take some profit. But we want to take profit every day if the market allows it. Right now we're looking at a down market, so we'll just sit here and monitor. Really only have a half hour to look at it, but you don't want to be sitting here looking at your screen all day trying to figure out what to buy and what to sell. That's what the scan is for. So what was on that scan again? Let's look at the, no, that's not it. Yeah, BTZ and DSL. So, and the reason why we wouldn't buy anymore is because we're above our average price. If it was below, or we didn't have this already in our portfolio, we would buy some more. So that one just kind of just on the list. And DSL, same thing. So looks like we bought that yesterday. Looks like this is possibly in two different accounts because we have two different sell limits. So it comes up on the scans on more than one time. So if it's continuing to move up, we wouldn't be buying anymore, right? Because what you'd be doing is making your position worse. You want to be buying on the way down. So don't be afraid of that. But the way to get in is to know what your max shares are. The most you would want to put in to a stock of this type. Now this is actually a CEF, closed-end fund. So you don't want to put all your money in one stock. Now, it may look good. You know, you look at the percentages here. Let's go over and see. Okay, SAFT. So you stop what you're doing and you focus on your alert. So we go over and we look at SAFT. Make sure it's on your scan. And it is not on the scan, but we'll take a look at it just to see what happened. We do not buy anything that's alerted to us. It was probably on an old scan. You can see it's dropping, so it's not on the scan, so we just leave it alone. It's just an old alert. I'm sure it was on the scan in the past. Who knows when it was or when we owned it, but we can always go back and look in your statements to figure that kind of stuff out. But with the amount of trades that you're going to end up doing with this system, it's you're in, you're out. But we had a pretty hard down move here overall. What's the overall market looking like? Oh, no, it's even. So you can see it doesn't correlate to the overall market, the individual stocks. So let's take a look at DSL, the BTZ. So here you're looking at 6.6%. Now normally anything but CEFs we want at least $1.20 per year per share. And DSL, This one's paying you 7.2%. So it gives you an idea. We're trying to get that before before the year is out. So if you mark that time that you bought it right now, well, in between there somewhere, it was this week. So you want to try to get that full amount before the year's out. That's the trick. So if this jumps up here and hits it next week, or maybe it hits it next month, maybe it comes back down and you buy some more, right? So your average price is down here somewhere. But don't keep loading up on the same thing if it's crashing. You have no idea. Coming down 50%, you average yourself down. It has to be making decent moves down for you to DCA. Do not get into this just, well, I'm just going to buy as many shares as I can. You just don't know where it's going. Nobody does. So let's go back over here to Mosaic. It's just a lot easier to look at what's actually moving. A lot of times we won't see what's going to activate because you're just not really paying attention to it. It might already be close. That one's not. I like to look at the ones that are actually moving down. They're a little bit more interesting. The ones that are moving up, I mean, they're self-fulfilling, aren't they? And keep on moving up, they're going to sell. We got quite a few coming down, which is fine. We're going to get that movement. Looks like oil's got some weakness. I go to the other extreme. Analysis is from high to low. HRZN. Yeah, there we go. So TLT bonds are making its move. This hasn't shown back up on the scan, so we're still waiting. All right, TRV. Check and see. Is it on the scan? It is not on the scan, but we'll look at it anyways. Make sure that we don't have it in our portfolio already. Probably not. We've sold it before, I know. Oh. Heck. Yep. That looks like it's coming close to a dividend payment, but it's not in our portfolio, so we don't worry about it. That's the one we're trying to look at. Here we go. Starbucks moving up. Looks like that one will probably phase out. Now this is one that always sneaks in on me. It looks like it's either a semi-annual pair or an annual pair, but I'm going to make a mental note. How many times have I done that where I don't know how it gets into the scan, but somehow or another it's a glitch in there. But I don't deal with semi-annuals. It's nice that it pays the dividend, but it's not much. So, and I don't know how it got in, to be honest with you, but as soon as it hits, we're at. So you make I don't even know what the move is on it. Looks like it's $1 something, $1.20 maybe. Yeah, it's only paying. I'm sure it's a semi-annual. But yeah, doesn't matter. It's not a lot of money tied up. We'll just let it do what it's going to do. If it comes down, we'll buy some more. So what do we got here? RMR on the move. Yep. You never know when the action's going to take off. That's the thing. That's why you don't want to watch. You just want to manage your portfolio as best you can. Stick to the rules. Don't listen to the news. The news ain't going to help you. Looks like Cardinal Health is trying to push higher. HRZN. Yeah. Let's do a check on the cryptos. Looks like we're still coming down. Looks like we're going to get in at 31,851. You see our risk has gone way down. You know, the lower it goes. See, with my system, what it does is it's looking at volatility, right? And if there's no volatility, we don't want to get trapped when the volatility hits. Once we're in the volatility, we increase our size of our positions because we're going to be taking it quicker. But this is just like a slow bleed, and who knows where it's going. I mean, this could come all the way back down to 10,000. Who knows? But we want to take as much profit out with as little risk as possible. So you're accumulating on the way down. If this sucker decides, let's say it bounces off this one and continues up to 100,000, then hey, you know, we'll be taking profit all the way up and continue to buy and sell. There is no profit unless you sell something. This whole idea that they have, this is what, EOS, just another small one. Bitcoin Cash, looks like it's still bleeding out a little bit. What's going on with all these? I cannot seem to keep these off the charts for some reason. This is how many trades just in the last month or so. I don't know what happened here. I got a, what do you call it, a support ticket into Motorway to try to get this crap off my screen. Just started doing this. I don't know, last update or something. No big deal. We know where we're buying. We know where we're selling. Litecoin. Yeah, that's a messy looking chart. You can see it's all about price levels. All right, so we'll get out at 171. We've moved down from a half a Litecoin down to 0.3. It's all based on risk. We don't add more because it's lower. That's all you're doing is sealing your fate. XTZ. I have a feeling this one's probably going to go to 0, but never know. Like I say, and with the cryptos, there are no dividends, so you better be taking profit. That's all I can say. Let's go back to the charts and see what's going on. Dead. We'll go down through and see which limit orders we got. So these are all, any trails, they're good for life. I mean, this sucker could come all the way down to 135. We're game, right? Because it came up on the scan. So PCH, same thing. That's is that Publishers Clearinghouse? Oh, Potlatch. I don't know why I keep thinking it's Publishers Clearinghouse. And I don't really care what it is, as long as they're paying a dividend. Right. So we have a buy limit down here. Obviously, for whatever reason, it never tagged it. Probably just not enough. There's probably too many orders ahead of me, and then it bounced back up. It happens. We would have already been out on that trade, but still it can keep on going. Who knows? DFP, INDB, same situation. See, we bought it up here. This is back in March, so we've collected one dividend on it, and we have, what, one share? So are we getting hurt? No. So we've made 48 cents, and we're waiting for it to come back down to this 50% retracement. And then we're looking at somewhere around the 85 mark. That would be our new average price. So then we only have a short distance to go to make double the amount of profit. So HIE. This trail's been in for a long time. I'll probably have to reset it after it times out or matures out. So ACV, same deal. Some things just don't move, right? But you're ready if they do. We'll go back over and we'll look at, oh, wrong one. All right, I think ETN might be on, so let's see. ETN, yes it is. So we're going to put that order in. We need to go to this one. I always like to do it in Classic because it's just a little easier. ETN. So we'd sold it last week. You can see there with the red, and we're fixing to put a trailing order in, make sure that we're still at 17 for max shares. So that's equal to 2, right? 10%, because this particular account's under 100,000. We'll go 2. The last thing you want to be doing is getting aggressive when the markets are at these so-called all-time highs. I don't know what the all-time high is. Nobody does. But we're going to trail this by 274. All right, so that's order in. So that's all it takes, right? So now you just, forget about it. When it hits, it hits. Now you set up. In this case, you'd be trying to target $3.04. Multiply that by 2 to be about $6.08 of profit. Of course, if you're on any other platform other than Interactive Brokers Pro version, you won't have to pay any commissions while you're doing equity trades. I don't know how long that's going to last, but it's great if it does. I pay $1 per side, and if we end up getting a trade, I'll show you how I work that. You just work it into your price. So bit, yeah. The nice thing about just the classic version is you can see all your percentages here. The overall portfolio right now as it sits on a cost basis of 64,172. You're looking at an 8.64% profit if the market crashes tomorrow. Of course, the dividend yield will increase as the price goes down. That's just numbers. Looks like CAH is trying to push even higher. Yeah. And that's where the charts can be very deceiving for people, because the different scales, the numbers, depending on the price. I'll go back and look at that CAH. You can see from here to here, right? It's only a dollar, what, $2.25 or something. So people get confused, and then they go over to another chart and they look at something like this and they're like, well, that looks like a larger distance, doesn't it? But it's actually only $1.50, because it's all scaled based on the chart. So charts can fool people. Don't fall into that trap. Use the numbers. That's why all these, what do you call them, moving averages, and I even forget what half of them are, because it's been so many years since I've even messed with anything like that. You're much better off. Well, I keep picking that one. EGI. Remember, these ones pay you monthly. CEFs pay you monthly. There's another monthly. This one's been in this portfolio a long time. You can see by the numbers, 360, right? And I can't remember what I think, well, it's probably over. It's probably in the, let's take a look. Let's see, EPV. Should just annotate it on the other charts. It'd save me running back and forth. Oop. Yeah, so 392. So we could possibly buy some more, right? Because it's 392. That statement's no longer. It changes. This is my point. So your max shares can change depending on the market conditions. But we know it's 392. So let's go back to the mosaic. So you see it's got, that seems like a far distance, right? Because you keep looking at all these charts where everything's real close, but it's just numbers, right? So looking at 1483 to 1306, so that's $1.83 plus minus 6. So what is that, 170, 178, 177, somewhere around there. Yeah, don't use indicators. If you want to, that's on you. They will hurt you. But a lot of people don't realize that TLT pays monthly. It's a good monthly payer. And because the price is so high, obviously your take home or your yield is going to be lower. So, just an easy way to do that is if it's paying you, let's say it's paying you $2, right? Divide that by whatever the price is, 140. So you end up with that number there, multiply it by 100 to get your percentage. It's 1.42%, right? And if you have, let's make it $2 divided by half the price, right? 70 bucks. Then multiply that by 100, you end up with 2.82. So the dividend amount is what you're looking at. The percentage, your yield, doesn't really have, it tells you what you're making on your money, but it's not I wouldn't look at that as your standard. I'd be looking at your dividend amount. And like I said before, $1.20 per year per share is what our minimum amount is for our scans. Now, there's plenty of stocks out there that pay much less than that, and we're just not interested in those because it just takes too long. You're tying up money. $1.20 is actually kind of low, but when this market finally returns back to a better mean overall, your dividend yields are going to look much better, and then you'll have much more stocks come up on the scan that you'd be more willing to put more money into. Of course, above that, and you may end up having to move it up a little bit because you'll end up with so many more stocks. Right now, we have we're at a low in our portfolios. We need more, and we have a lot of cash sitting on the sidelines ready to go back in, but that's going to occur when the market comes down. Right now, it's just too high. You can't buy many shares. It's just you're risking too much. So keep that in mind. But yeah, I don't see anything else really happening here. XOM, okay, that's oil. Exxon Mobil, see if we find any others that are moving. Okay, ITW, Toolworks, let's see if that's on the scan. Yes, it is. So we're getting some downward movement with a little bit of correction back up. That's what that really means. So let's get out of this into classic. We'll do the exact same thing. This is the rules that we keep. ITW. Right? Now you may think, well, shit, that's a $231 stock. So we look at it, and because the max shares are at 11, you know, you're only going to be buying one share, right? And the profit's only 1.9%, but the actual dividend is $4.56. So what you're looking to do, we're going to put that on here. Always annotate what you're doing so you know where you're at. In the past, you know what you did, so you can look and see. Gives you a better feel for what's actually happening. So we're going to do the 1 and discard that. Now this can do anything, right? It can come up, it can jump up and hit us, but we're actually going to be trailing this by what I like to do. And this is just my own little thing. 456 minus 40 cents. Right? So 416. I'm going to trail that by $4.16. We're not trying to get in today. That's not our thing. And we know that the dividend amount, if we look at it, let's go over here to a watch. We can see TW. So we've got our order in there. We know June 29th. So we got a couple weeks, right, until that's actually going to hit that dividend for $1.14, right? So we'll get that $1.14. Just multiply that by 1,000 different stocks each month, or however you want to look at it, per year. That's how you're going to be making your money if it never hits, right? So first off, though, we do have to have that in our portfolio to actually get that dividend amount. But hey, this thing can come back down here. It can also go straight back up. It can do all kinds of things, but we're not worried about that. We stick with our rule. Okay, we don't put too much money into one stock. So if you look at your overall portfolio, this is the gist of it. If you take what was that, $231? Let's use a round number, 231. Now you divide it by how much money you actually have in your portfolio, right? The market value, that's constantly changing, obviously, right? Oop. Divided by 69,878. Multiply that by 100. That's 0.33% of your portfolio. You can lose that one, and how much do you have left in your portfolio? It could go to zero. But if you put, let's say you bought 100 shares, right, times 231, that's 23,000. Divide that by the 69,875. Multiply that by 100. Okay, so now you get 33% of your portfolio in one stock. What happens when it goes to zero? You're down a third of your portfolio. This is how you're going to manage your risk. Don't fall in the trap of going big. It's not where it's at. The big boys don't do it. They use a metric. RMS. MR. Go back to the mosaic, see where it's going on. These ones are jumping around up here. RPM was bought this week. I'm getting some positive move here. XOM. Jersey in. All right, well, it looks like it's going to be kind of a flat day, but we'll see what happens. Let's take a look around at a few other little things on here. One thing you'll never be able to do is sit there and wish something higher, okay? Just accept that you're going to own this forever, but you're going to get paid, right? So if you can get paid, the only way you can get out of this is if it hits your target price. That, or if the company goes out of business, or the CEF evaporates. But do your research and see how long some of these have been around. I know a couple of them. Where's that one? CRF. We're in and out of this, but this one's been in this account for quite some time. Well, it's not on this one. Hold on. It's going to be on this one. CRF. Okay. So this thing's been paying something like 14%. Let's see what it's at. 16.3. It's based on the price, right? You can see they had a reduction in their dividend payments per year. It's 202, blah, blah, blah per year, per share. And that's dropped to 184. Now these move constantly. I say constantly, like every year they change depending on the value. Now CRF's an interesting one because it's been around since 1973. And the sister sister CEF, or closed-end fund, CLM, has been around since the same amount of time. I think we have that on one of these other accounts. Now, some of the other portfolios that we don't show, obviously, you know, there's larger sums of money involved, and it's just not, for people that are just learning this system, the bigger numbers will, it's not that you can't comprehend it, but if you can't trade small, you'll never be able to trade big because you don't know how to manage your risk. If we're not taking any losses, there's only one possible thing that you can be doing, is increasing your capital. So this is every day we're growing. We're never losing money. Now, if we lose money, it's either because we made a mistake, okay, and that can happen because you're in a rush. So you take your time. This isn't going to happen overnight, but in a couple years, if you use the rule of 72, right? So we'll just take one for example. If you have 72 and you divide any percentage into it to get how many years? So what was that one, 16? Divide by 16. So it's going to take you 4.5 years to double your money. So if we go back, let's look at CLM. And let's see. Okay, CLM's paying right now 16.5 at 192. So it's an approximation, right? It's going to take you 4.5 years. So they got $21.99 invested. We're down 165, right? But if it's been in the account for, let's say, 4.5 years, that number has doubled. It's already paid you. So you're still down to 165 if you were to sell it. So we'll never sell it. We'll continue to pull in that 16 cents per share per month, which equates to 175 times 16 is $28 a month, right? You know, people scoff at that, but when you're looking at a small account, when you get up to $500,000, just multiply that by 5, right? So you'd have 5 times. Well, in this case, max shares. I don't even know what the max shares is on this because it's, well, we don't have it on there. It's been so long since we've traded it, but I'd have to go back and look. Maybe it's on the chart here somewhere. There it is, right there. 186. We probably need to update that. So we could possibly buy another 10, but see, we're still within this range. We're within this cycle. We still hadn't hit the 0 mark. So it's one of these ones that just kind of floats around. Now it's had a little bit of a move up in the last 6 months, but it usually stays pretty range bound. So it's a good dividend payer, and it just continues to pay. So in 4.5 years, you just doubled your $21.99 with no risk or very little risk. Your risk is the $21.99, but you're not going to make that, 2, 3, 400% that everybody's screaming that they're making, and I'd like to see it. But yeah, maybe there's somebody that's doing it, but I've been doing this. So the easy way, so you don't have to sit here and look at this all day, is to collect your dividends and try to collect the yearly dividend before the year is out. That's the gist of it, right? So if we bought this back here somewhere, right, we've already gotten paid two dividend payments, and we're just waiting for it to either hit here or to come back down to this 50% mark, and we'll buy some more and continue to pull in the dividends. In EOI, what's it paying? 5.9%. If the price comes down, this dividend yield will go up, even though the dividend amount stays the same. Now it can change. This one hadn't changed from last year. This one went down. This one stayed the same. This one increased by half a penny. So you can see that they're constantly changing. And TTM means trailing 12 months. So this one increased, CHY. It's a monthly dividend payer. Take a look at it. All right. So it's increasing its dividends. 186, we got 175. So we could actually buy 11 more of those. If at the time, if this alerts hit, then we'll put in and keep an eye on, manage the portfolio and say, okay, well, if this drops down to 175, we take the order off because we can't buy anymore. It's all based on what the market is doing. When I say market, each one of these is its own little market. Don't confuse the overall market with your portfolio because they're two distinct animals. So CATC, another bank. Which one is this? I don't even know. As long as they're paying dividends, I don't care, right? As long as it reaches that threshold of $1.20 per year per share, except for, of course, the CEFs. Cambridge Bank Corp. Let's take a look at that one. Yeah, see, it had that big drop earlier yesterday, and now it's just pushing higher. So what was that all about? Don't care. Doesn't matter, right? I was prepared to buy more. You may still buy more. We don't know. Get it out of your head that you got some idea or any of these indicators are going to help you with trading. They do not. They're meant to mess with your head. Now, if you were to use them exactly the way that they were supposed to be used by the creator of those indicators, then you might stand a chance. But you got to remember, these guys that are using these or that invented them, they were rules-based traders and investors. So they made their money more so off of selling the indicator to other people probably than, they said, hey, look, see how it worked? It worked great today. Anybody can nitpick or cherry pick anything from the past because 2020, it always works in the past. It's whether it'll work in the future. So don't fall into that trap. What works is buying low and selling higher. If you're a follower of the Bitcoin, of any of the crypto markets, you'll know the amount of hype around it. I don't listen to any of that a hodler, a hoodler, whatever you want to call them. That's FOMO. They've got everybody believing that it's going to $1 million, and maybe it does. So have a half of one. Buy a half of one when it gets down to $5,000. You have $2,500 in it. I'll just continue to pull money out of that market, because only when the volatility is there, because that's the only time you're ever going to make any money when prices are that high. If it's sitting in a $100 range on a $50,000 product, that's like buying Berkshire Hathaway at $200,000 and saying, yeah, I bought one share. So what are you going to do? You're going to wait for it to go? You can't even buy one share, right? Or, why would you? It doesn't make any sense. It's all done on options trading. And the reason why we don't do options trading, I do options trading, but it is only to establish positions. So therefore, I only sell options. I don't do it in these small accounts. Why? Because it takes up too much capital and it's too much risk. Don't fall into that trap. Options are dangerous. They'll take your money. They promise you big gains, right? But there's a time factor. I don't care. It's the same thing. If you're selling something, if you're willing to take possession of it, that's one thing. But you got to have the capital to do it. So these smaller accounts, I mean, 60,000, that's a small account, right? And then got two other accounts. One here at what, 30? Yeah, one at 28, and so the one at 35. So like I say, you get about 120 that we're showing you how you can make, anywhere between 0.8 and 1.5% per month. So, well, shit, I can't make any money that way. So, well, let me step you through it. Okay, so 0.8 times 12 months, that's 9.6% on your money, right? Remember the rule of 72. Divide 9.6, right? So 7.5 years, you can double your money. That's just if you do the low end. Okay, so if you end up with 1.5% per month times 12, that's 18%. So now we take that 72 divided by 18, it's 4 years. So it's up to you how you want to manage your money. If you're young, I mean, if you're in retirement, this is just a good way to bring in extra cash per month. But if you're, young and you're falling into these traps and you've lost some money that you worked hard for, you're going to keep beating your head on that wall because you're under the impression, oh, looks like we sold that TXRH. I know it's a big take on that one. So which one was that? I think it was on this one. Here we go. Yeah, 87 cents. As you can see what the dividend amount was. So I put it down as 40, right? So we took 87 cents back out and we got out of the position. That's how you manage your position. You didn't take a loss. And even though it was a mistake, right, because it's not paying us what we wanted, we still got out at a positive. And that's after paying commissions on both sides, $1 on each side. So that's a plus in my book, right? So 87 cents. Big deal, right? Whoop, whoop, whoop. But you didn't lose that money. We didn't lose $100. So keep those type of numbers. You always have to be working the numbers. If you're worried, you notice I hadn't talked about any news. I hadn't talked about what if this happens, what if that happens. All I'm doing is looking, hey, how can I make some money? Oh, here we go. Markets start to pick up. Only took, what, almost an hour? AEP. Let's see what that one is. And it's not on the scan. But we'll take a look at it. Maybe it's in our portfolios. I don't know. Let's just take a look. It's just easier to go to the chart, punch it in, and they'll show you if you got it. Ooh, that one's dropping hard. This is what I'm saying. I've been watching this, and I'm not one to, call directions or anything because I have no idea. But when you start seeing more of this, it's usually, see, we already have it, right? So here's a perfect example. We just hit an alert. So now what we do is we had 2 in there, so we know we're going to go another 2. And we're going to buy at that, what does that say, 80? Yeah, 80.97. And make sure we're on the right account. So we'll go to 2. And you'll be able to see if it actually activates in the future. Limit 80.97, right? So what do we do? Here's our, this is a 6-month window, right, that we had this in when we bought it. So this was the low, this was the high. So we're looking at it and we're saying, okay, we're going to get back in. We're going to buy 2 more. So our average price is going to be somewhere around the 84 mark. And then we're still going to target the same dividend amount. The only difference is we're going to have twice the amount of shares to sell. The light bulb has gone off, and you know what I'm talking about. So we got that order in, right? So we just wait for it to happen. It may come down and hit this. It may not. We have no idea. It could travel all the way back down here. And what do? We buy another 2. That would put us just over where we're buying it right now. So we have that much less distance to go, right? And then you want to look at your max shares again. But that's how you're going to make money in these markets, especially if they start falling. When they start falling, that's going to be interesting because there's going to be a lot of people stuck at the top, you know, because they're putting huge amounts in and they're not taking any profits. Think about all the people with their 401ks. They're just, oh, I'm making great dividends. It's like, well, that's, you know, you're doing part of the equation, but you're, you know, when that thing goes in half, a lot of people don't understand how long it takes them to get back up to that even point because their dividends keep getting reinvested, which is making their positions worse. And it makes your positions worse by taking those dividends and reinvesting above your average. So if, like, let's say I got paid that 38 cents today, and that would move our average cost up if we reinvested that money into the stock, bought more shares. It would actually move this line higher. Now, if it was below it, if the price was below it when we wanted to reinvest it, I have no problem with that, right? But if it's just below it, I mean, how much is it going to move it? You know, this is where people don't understand what's actually happening. They just trust others to invest their money for them. Do it yourself. But went a little long today because there wasn't a heck of a lot going on. But for those of you that are at work watching this after work or whenever it is you get around to it, just remember, follow the max shares, follow the risk profile. This way you won't get trapped. You won't get trapped at the top. That's what we're defending against. We're defending against these huge moves, but we still want to keep making money in the market because we don't know when it's going to come down. But we're just not going to, well, hey, this looks like a good time to dump $10,000 into the market because I think it's going to go up here. That sounds like Jim Cramer or some lackey, you know, that's pushing some obscure, well, some well-known stock that's at all-time highs. Like, yeah, he's trying to sell, so he needs some buyers. That's the whole key. We don't care about that. We don't care about the news. We care about what's paying us. Ask yourself this: what's Tesla paying you if you own Tesla? If it's still going down, right? You're hoping to God that thing splits or it comes back up. That's called hodler, FOMO. Now you're gone from FOMO to scared to death because you got way too much money invested in it, and it doesn't pay you squat to hold it. I mean, absolutely nothing. But there's those people that will, well, I'm just take $100 loss. Okay. Well, how many times are you going to do that before you realize that you're down $1,000? You'll take a loss, but you won't take a profit. It makes no sense. But they got everybody convinced that that's the way you're supposed to trade. You got to protect your capital. Take that loss. How about I buy a bunch of different companies and they all pay me rent, dividends, and I continue to grow my wealth, right? So these small accounts are great examples of how you can grow it. I mean, you can go back and look at some of the previous, uh, videos that we put out probably over the last 4 months of monthly statements. We take the smallest account that we manage live and show you how you can grow your money. Yes, it's slow. There's no get rich quick scheme, right? There is for the people that are pushing you into buying things you shouldn't be buying. And then they're real sorry because it didn't work out this time. But next time, it'll work next time. What works is continually growing your money. So, all right, well, I'm going to cut it short. I got to hit some other portfolios I got to look at. Obviously, there wasn't a heck of a lot going on, but I've got some dogs to look after, and I'm going to do a little work around the house. So I got to get off of here. So have a good rest of the day, and we'll see you guys this afternoon.